Homeowners insurance is incredibly expensive. My name is Rich Crosby, and I'm the Trusted Broker. I wanted to touch on this. Now, I am not an insurance broker, nor am I fully versed in the laws and whatnot with insurance, but I am a property owner and I have lots of insurance, fire insurance and liability insurance on my properties. And so I am watching this intently because it is a big part of the model as far as costs are concerned. I mean, there's a big line item, $400 to $500 a month for insurance, which is the fire and liability. So I just want to touch on this quickly. So why do I keep saying fire insurance and liability insurance? Well, back in the good old days, before we had all the fires and the insurance companies' hands were tied by law, and they could not raise their rates to be competitive, and decided to pull out of California. That is legitimately what happened. Do some research on that. But before all of that, we had an insurance policy that was done by some of these very large, insurance entities, State Farm, Farmers, AAA, all those places. Mercury's another one, where they would have the fire insurance and the liability insurance all wrapped up in one. And now it's typical that the fire insurance is done through California Fair Plan, which is a government subsidized insurance program. And then you have what's called the wraparound policy, and that is the liability stuff, which is on a separate policy. So you're having two policies to cover your house. So what's the difference? Well, fire insurance is like the catastrophic insurance. It's total loss stuff. It's like the biggest ticket item. So if your house burns down and you needed to rebuild it, that's where the money would come from. The liability side is if you have a dog that bites the neighbor and the neighbor sues you, that's where the liability part comes in. Someone gets hurt on your property. And so together it's a complete package. The fire insurance is the one that's really expensive, although liability isn't really cheap either. There's still quite a bit of cost there. But for reference, fire insurance would be, in the $4,000 a year range, where liability is around $1,000. And this is generalities, okay? Everything is a little bit different, case by case basis here. But if we're just going to talk high level, liability is probably a quarter of the cost of the fire insurance. So what are some of the things that you can do to maybe keep the fire insurance a little bit cheaper? And again, I'm an investor and a homeowner. I look at this as, risk management in a way. You can't mitigate all risk. You can only just manage it. And I read somewhere that, the average time between claims on a house is 7 years. So that means every 7 years you're going to need to use your homeowner's insurance for something. It's total average, total general. Again, don't take me up on this. Okay, this is just me doing my own research in my own business and how I look at things. And I think that's why you're here, is to hear what I have to say. But a couple things that I do to lower that fire insurance cost is, first of all, I'm a contractor, so the replacement costs of a house, replacement costs would mean it burns down. We got to do all the demo to clean it up, and then rebuild. And so because I can do a lot of that work myself, I don't really put my policy on a replacement at what maybe the market value is. I have it a little bit lower than that. So for instance, let's say if you were to get normal insurance on a house, you would be at, say, $400 a square foot to replace it. Well, I might factor in a $280 square foot to replace. And so that means that instead of me having, for a 1,000 square foot house, having a $400,000 replacement cost, I'm more going to be in like the $280,000 range. And so with that lower replacement amount, my insurance premium is less, right? If the insurance company doesn't have to pay so much to replace the house, then they're going to charge me less. The other thing that another trick that I do on my properties is I have a higher deductible. So instead of a $2,500 deductible, I'll have like a $15,000 deductible. So that means if the house burns down, pretty much the first $15,000 of the money coming in from the insurance is going to go pay to pay the deductible. And those two things, the lower replacement cost and the higher deductible, those two things can lower that premium enough where it makes sense, and I found, that there's sometimes $1,000 difference if I'm using this trick, $1,000 per year on the insurance. So anyway, that's kind of a little breakdown on what insurance is. Every house is a little different as far as where the insurance premium is going to be. If you have a house that's in town, like, we live in the Grass Valley, Nevada City area. If you have a house that's in town, meaning it has city water and it has city sewer and it's close to a manned fire station, generally it's going to be a little bit less. Some other factors could be what type of roof it is, what kind of siding it is, what kind of foliage or trees you have around the house. I mean, those can have some influence, not as much as you would think, because insurance companies have just blanketed the foothills as just high fire. But they do have these little twists of, if it is in town, the likelihood of it burning down is a little less than if it was really rural out on 20 acres. And so anyway, that's my quick 6-minute on insurance. And man, I mean, there's a lot more to talk about, and I'd love to chat with you about it, and I'm happy to. All you have to do is reach out, and there's ways to do that, I'm sure, that you know of. I have a website. All the information is down below of the video. But put a like on this video so more people will see it, and subscribe, and I'll have more to talk about. Thanks for your attention.